This is the biggest macro trade of all time. It's the best performing asset class in all history in the shortest period of time. Right, so you've got the gift. I don't want to hear anybody say we've been shut out, because everybody can put 10% in. Everybody. Right? If you live in the Philippines or you live in Nigeria or you live in New York City, you can put 10% of your wages in. Right, so this is an egalitarian, democratic, global, homogenous asset class. And it's the biggest trending asset class of all time. So, given that, it's pretty easy. It's just buy it and hold it. But firstly, you have to deal with your own psychology. I'm down, I'm up, FOMO, my friend made 100x, all of this shit, right? You need to stop all of that. And then you need to not use leverage.
In today's fast-paced world, where technology evolves at lightning speed and economic uncertainties are quite common, understanding the complexities of global finance has never been more important. With the rise of cryptocurrencies and AI, more and more opportunities have opened up for investors. At the same time, numerous threats have also arisen for certain businesses and jobs. In a recent interview, financial guru Raoul shares his expert insights into the world of cryptocurrencies and the broader implications of technological innovation. Pal, known for his macroeconomic analysis and bold predictions, offers a compelling vision of the future, where crypto reshapes global finance and society as a whole. To him, cryptocurrencies are the biggest macro trade of all time. He also highlights blockchain's transformative potential beyond crypto, foreseeing digitized assets and streamlined processes, leading to enhanced transparency and efficiency in the world of finance. Let us now look at clips from his interview, as Raoul shares his expert macro insights. As we show you these clips, please take a moment to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Make sure to watch the video until the end, where Raoul shares the one thing that we truly need to do when it comes to crypto. We hope you enjoy the video.
And then you need to not use leverage. Because if the game is to hold onto your tokens from $2 trillion to $10 trillion to $200 trillion when it's a full mature asset class, the game is to keep hold of your tokens. Don't give anybody an attack vector to take your tokens off you. Which is why, if you can self-custody, better. Certainly don't borrow against it, because somebody will take your tokens. It's just like, don't do dumb shit when given the biggest opportunity of all time. If the bloody asset class is going to go up another 100x from here, you honestly don't need to use leverage. You don't need to spend your whole time looking for the next 100x token and stick all your money and hopes and dreams in that. Just put 90% in the main asset classes and it'll do fine. So how I'm thinking this through is, we talked about this is the biggest macro trade of all time. We're still in the middle of it. So great, focus. Yes, you should be involved in technology. You should be investing, if even just to learn, right? Because the biggest change to mankind and society is underway. And crypto is just a part of it. That's just like the transaction, storage, value layer of the internet. That's just a part of the whole story. The bigger things are AI, robotics, genetic science, well, what that all unlocks, and energy. And this formula that I talk about is the GDP formula. GDP formula is basically population growth plus productivity growth plus debt growth. Right? We stopped and blew up all debt growth in 2008. All debt growth now is just servicing of old debts. So really, the global economy, and particularly the developed world, has slowed down trend rate of GDP growth. Why? Because we've got an old, slow-growing population, and in many countries now shrinking. Italy, Japan, South Korea, Taiwan, I mean, they're all starting to shrink now. Okay, so you've got lower population growth supporting this large debt. So there's not enough money to pay for the debt, which is why the central banks print stuff. But over time, you need to change that equation. Because if not, we're not going to blow up, because for us to blow up, which is what everybody fears, the value of collateral has to go down a lot, which is what happened in 2008. But we've learned this new trick: debase the currency and optically the collateral goes up, right? You cannot go bust in that environment. Nice. Well, not on a societal level. So okay, how the hell do we get out of this quagmire? Slow growth, aging population. The answer is, well, firstly, population growth. But nobody wants to open immigration because wages haven't gone up in real terms. So the more immigrants, the less money there is to share in the economic pie. So people are like, no, we don't want that. So then comes AI. AI is infinite human knowledge. And it's going to get cheaper and cheaper and cheaper until it's water. So you scale knowledge at zero cost, which is the human brain, and above that, because that's where we're going. And then you've got the robots, which scales physical humans. So now we have infinite humans at an exponentially decreasing cost.
Cryptocurrency, AI, robotics, genetic engineering, and energy technologies. These are the innovations that hold massive potential to reshape society and the economy significantly. With advancements happening quickly, we're left questioning how these disruptive innovations will affect businesses and markets. The rise of these technologies certainly brings both new possibilities and uncertainties. Pal highlights the potential impact of artificial general intelligence on markets and the opportunity for individuals to achieve significant wealth through technology. He states that everyone should seize opportunities amidst the fast-paced changes and despite uncertainties. Pal explores how capital moves swiftly within cryptocurrencies, the widespread presence of bot-managed treasury operations, and the pressing need for rapid adaptation to attain success in this dynamic environment. Let us now go back to the interview, as Raoul Pal explains these important things further.
Now, when everybody gets this, the speed of disruption is going to be like the meme coin cycle or the ICO cycle. What business lasts? Who gets disrupted by whom? How long do these disruptive cycles last? They could be hours, they could be days, they could be months, maybe a few years. We just don't know. We just don't know even what VC investing means in that environment. Do companies stay around long enough before they get disrupted? Or should they be tokenized so you can put money in and take money out on the time horizon that these businesses last? Because VC ain't going to work. What does it mean once we've got AGI? What does it mean for markets? Once we've got something that can pretty much process all of the data and all the understanding of markets and make investment decisions. What, is one person going to figure this out and become the richest person that ever lived? Or do they... people aren't thinking this stuff through. They keep talking about, well, it's going to replace jobs. They're missing the bigger picture. This is beyond our understanding of anything that we do. Okay, and it's wildly exciting and terrifying. We both agree. So what I'm suggesting is you have 6 years to make as much money as you can, because you have no understanding what the world is going to look like. And luckily, we've been given the gift of an opportunity, which is we can invest in technology, more so we can invest in crypto. But beyond that, I mean, what is an asset management business? What is this conversation? I've already developing an AI that's my avatar that can speak. Well, in 3 years, I'm just going to put my avatar speaking to yours. I won't even be here. Money is actually hard to come by, and it's periodic. You know, there's tons of money, and then there's no money, as everyone's just learned in 2022, 2023. Is you could have the best business on earth and beg people, and you cannot get money. So I think people are scarred, and so they keep this treasury as opposed to reinvesting it because people are so scared of the capital cycle. But this is to my point. The capital cycles are ferocious in crypto. They're quick. You can make a lot of capital. Then there's no capital. Then there's capital again. Businesses, this is real-time VC. So businesses fail, businesses grow, businesses stall out. It's all there in real time, played out in the drama of Twitter. And that's what it is. And people have to get used to that. And I think the world is going to look more like that, not less like that. All you have to do in crypto is one thing: adoption. People have to adopt your technology, whether it's the underlying protocol layer or it's the application.
That's true.
That's all it is. You have one job, is to do that. And, you know, a lot of people try to make complexity out of this space. If you are a blockchain, you have one job. Your one job is to sell block space. You're a block space salesman, and that's what you do. You're no different than a cloud compute person. You know, We dress it up differently, but we sell block space, and we build applications on the block space. That's it.
As Pal suggests, success in this fast-paced landscape requires a combination of luck, hard work, and adaptability. He simplifies the essence of blockchain technology to selling block space and emphasizes the importance of adoption for technological success in the cryptocurrency space. After a challenging period marked by a bear market in 2022, the cryptocurrency markets experienced a notable resurgence in 2023 and are continuing in the first quarter of 2024, with prices rallying across the board. This recovery coincided with the approval of the Bitcoin ETF and Bitcoin's supply halving cycle, a phenomenon that has historically influenced market sentiment. As anticipation builds for the fourth halving event scheduled for April 2024, optimism among investors remains high. Amidst these developments, Security.org conducted its annual cryptocurrency study, providing valuable insights into consumer sentiment and adoption trends. The findings reveal a notable uptick in cryptocurrency awareness and ownership rates among American adults, with 40% now holding some form of digital assets, a substantial increase from 30% in the previous year. This surge translates to a potential market of approximately 93 million individuals actively involved in cryptocurrencies. Among current cryptocurrency holders, there is a strong inclination to expand their portfolios, with around 63% expressing intentions to acquire additional assets in the coming year. Bitcoin, Ethereum, Dogecoin, and Cardano emerge as the most coveted currencies among respondents, reflecting a diverse range of investment preferences within the crypto space. Additionally, the study highlights a significant surge in female participation in the cryptocurrency market, with ownership rates climbing from 18% to 29% over the past year. This may mean that there is increasing inclusivity in the digital asset ecosystem and the growing appeal of cryptocurrencies across diverse demographics. What are your thoughts on the impact of cryptocurrencies and AI on the future of finance? Share your opinions in the comments below. If you found this video insightful, don't forget to hit the like button and subscribe to our channel for more expert insights into the world of crypto, finance, and technology. Turn on post notifications so you never miss an update. Thank you for tuning in, and we look forward to seeing you in our next videos. As always, happy investing.